Well, hello, ladies and gentlemen. Welcome to FNA's 16th CBDC broadcast. I had a look this morning at the stats, and so far we've had almost 3,000 people register for these broadcasts now. So, as always, thank you for supporting our events. Of course, thank you to our guests for making the sessions hopefully as engaging as they are. We've got another two fantastic guests for you today. Before I hand you over to them, just some very quick housekeeping whilst we wait for others to join as well. So this CBDC broadcast follows a 60-minute format. Roughly 40 minutes of that will be discussion with our guests, followed by a very short Q&A. So if you'd like to ask a question for the Q&A session, please do so, but don't use chat functionality at the bottom of the screen because it tends to get lost in that. There's a little button that says Q&A, click on that, stick a question in there, and then if we have time at the end, our guests will cover as many of them as we can. Next slide, please. So for those of you who perhaps aren't as familiar with FNA, maybe this is your first session, I'll just explain very quickly what it is that we do. We are an advanced analytics and simulation technology company. We work across four core sectors, namely central banks, commercial banks, FMIs, and national security. And our solution is software-based per sector. So where a central bank might use our technology for RTGS stress testing purposes, a commercial bank will use the same underlying tech to optimize their liquidity in real time. Next slide, please. So this slide digs a little further into our CBDC solution. Actually built in partnership with G&D, it delivers a flexible agent-based model of any payment ecosystem. The solution itself actually began life just focused on the early research and design phase of CBDCs, which gave the users the ability to understand the economic and also the financial impact of introducing one. Since then, we've gone and developed the solution to cover the full life cycle. So now allowing users to monitor, improve, and also analyze CBDCs post-launch too. We've got a number of organizations using the solution, including some very interesting work going on with the G7 central bank. At FNA, we believe it's absolutely essential to understand the impact of CBDCs through simulation before and also after it's rolled out as well. So I'm going to hand you over to Thomas Nielsen now, who works here at FNA as Director of Central Bank Solutions. Thomas joined FNA very recently, so wasting no time, we put him straight to work onto our broadcasts as a host. Thomas will introduce our guest and then we'll get the discussion kicked off. So Thomas, thank you. Over to you.
Thank you so much, Anthony, and hello everyone. So today's session is going to be on the offline capabilities of central bank digital currencies, or CBDCs. And offline capabilities can be defined as a transfer of value between devices that take place without requiring a connection to any ledger system. And this is a crucial topic that holds significant implications for the future of digital payments and financial systems worldwide. Because as the digital transformation is rapidly reshaping the way we conduct transactions, it's imperative that we ensure inclusivity, accessibility, and privacy for every individual and business. So CBDCs have emerged as powerful tools in this. Can you hear me all right? I see some comments. Sorry. Okay, good, thank you. CBDCs have emerged as a powerful tool in this transformative landscape, so they are revolutionizing the way we think about money. But we have to address a critical question: how can we ensure that CBDC systems work for everyone in society, regardless of their location or connectivity? And the answer lies in exploring and understanding the offline capabilities of CBDCs. So the ability to conduct transactions when offline not only provides a layer of resilience, but also supports crucial objectives such as financial inclusion, accessibility, and privacy. So we have brought together two distinguished experts. We have Beju Shah, the head of the Nordic Center of the BIS Innovation Hub, and Dr Lars Hupel, Chief Evangelist of CBDCs at Giesecke+Devrient, to guide us through the intricacies of CBDC offline capabilities from two different perspectives. So without further ado, let's start. And I will start with a question to you, Beju. Could you tell us more about your current work in the CBDC realm?
Sure. Thank you, Thomas and Anthony, and thank you to FNA for having me here today. It's a pleasure to talk about one of our projects this space. So to answer to your question, at the Nordic Centre, we're focused on two of our projects are focused on in the CBDC space. I'll come back to the offline piece in a second. First one we ran and released back in March was Project Icebreaker, which was a first of its kind retail CBDC, cross-border retail CBDC test that connected the proof of concept systems in Sweden, Norway, and Israel in a very tight focused experiment to kind of test a few key features about how you could connect these systems together and via a common hub. And the other project we've focused on is the one in the background, which is Project Polaris. So 2 weeks ago, we released a very comprehensive handbook, in inverted commas, on offline payments, which is probably the most comprehensive piece done on offline payments with CBDC that's been done amongst the for the central bank community. And the idea behind that really was, I've been working around CBDC for many years. There are a huge amount of deep questions to ask and to uncover, particularly at an early stage. And as Thomas alluded to, offline payments particularly is a really complex area. There are a number of different considerations, and it's probably one area of CBDC that isn't well understood because it's very different to the things that are typically experimented with. And it's bothered me for years. So we, when I was asked to work on this, as as part of the project. So the project itself focuses on secure and resilient CBDC systems online and offline. So we began with a mapping and investigation exercise into what actually offline means. And the other part of the project, again, takes a very grounded implementation type focus to pick up the other questions. So we also developed a security and resilience framework, which is a starting point. What that does is take the various international standards and other considerations out there and looks at it from a CBDC lens to say, these are the types of controls and other things you should be thinking about at an early stage, both in terms of your planning, whether it's in a POC or pilot, and building these things out as if we ever get to implementation for any of these things. The idea for both of these is to inform both management, but also the practitioners to say, okay, this is what's involved in quite big and complex areas, to help the practitioners bridge that gap between what they do today and what might be required, but also to map out saying, oh, okay, well, this is what I need to do. This is why I'm not doing yet. And this is what we need to do more of. So we start grounding a lot of these experiments into reality. And this is the beginning of just, this is the first iteration. With both the offline piece and the framework, we'll kind of iterate through and update as we learn more, we get more input, or we collaborate, through the work. So yeah, just to kind of sum up, I think we as much as I would like to do the experiments that push the thinking, at the same time I prefer also kind of trying to ground these big topics in reality, to go, these are big complex topics, going to be big transformation exercises for central banks. How do we prepare them in the right way? And yeah, so that's kind of it. Yeah.
No, thanks so much, Beju. That's very nice. Thanks for the overview. So I will just ask the same question to you, Lars. So what are you doing in the CBDC space?
Yeah, thank you, Thomas. Before I answer that question, I would just like to take a moment to recommend the document from BIS on the Polaris research. It's highly recommended, so please do take a look. I think there's a link been posted in the chat. Now, we at G&D Filia, we are working on an end-to-end CBDC solution with offline payments, of course, being a core part of our offering, but not the only aspect. In terms of current projects that are running, we have a few different clients, a few different countries. One of them is the Bank of Thailand pilot. We just kicked off the pilot a couple of months ago. And right now the bank has already integrated multiple commercial banks and payment providers, building up an ecosystem. And eventually it will even include merchants and customers. And we are currently scaling up the pilot to 10,000 users. So that's very exciting also from our side. There's another project that we're working on right now, which is with the Central Bank of Eswatini, where we're working on exploring the potential of the CBDC in their current ecosystem, in their current economy. And together with Banco Central do Brasil, we're working in the LIFT project specifically about integrating our offline payment solution with the PIX instant payment system that's already in place in Brazil. So it's going to be about the integration of those two separate systems and making them work together closely. And yeah, hot off the presses, the latest thing is that we've been selected by HKMA to participate in the eHKD pilot program. And we are partnering there with Standard Chartered Hong Kong, and we'll explore the potential implementations of eHKD, and also testing efficiency and resilience of offline CBDC payment capabilities. Now that's basically our projects. In terms of technology that we're cooking up, that we're working on right now, I just wanted to mention two highlights. First of the research areas is tighter integration with DLTs and the various different DLTs with their various different models that are out there. And the second research area is post-quantum security, especially in offline payments. Yeah, that's it from our side.
No, thank you so much, Lars. It's clear that we have two experts in CBDC here from different angles. So let me go back to you, Beju. How do offline payment capabilities align with the broader vision and goals of central banks in terms of financial inclusion, access, and privacy?
Yeah, I mean, it's a good question. I think this is also what we focus on in the handbook as well, because so let me just keep your question on screen so don't miss the point. So I think if we consider this as a whole, so as part of developing the handbook, we also surveyed a number of central banks around the world. I think we got responses from 55, that account for 71% of the global population. The goals and the objectives vary depending on advanced economies versus emerging market and developing economies, but also will vary according to kind of between countries, even in that, around what those goals are. And I think it's not just one goal that a central bank will aim for, aiming for one or more of the reasons that were set out. And I think in the handbook, which you can read, we set out 12 reasons why central banks may want this, and some are weighted greater than others. I mean, certainly in the survey, the things that came out were things like financial inclusion and resilience and privacy and cash resemblance. Offline payment capabilities, so if we take things like that, so where you've got situations where you haven't got connectivity, where there's there's more digital payment systems, but parts of the population may not have access to those, or because of connectivity reasons, are kind of left out or are unable to use those digital services. That could include them in, but in terms of things like accessibility or and so on, not everyone can use digital devices, right? Not everyone's got access to smartphones. Some solutions don't work for people with different kind of impairments or disabilities and so on. So offline payments capabilities ensure, and so if you look in the Nordics or Sweden, where there is less cash and barely any use at all, how do you ensure that everyone still has a means to pay, particularly for public money, in the way they do with cash? So we're not reliant on just private sector or digital solutions. If you're going to develop a public good or public service, or in this context, everyone needs to be able to pay, and that's just that last person in the corner, and several central banks have said that as well. So what you have is a range of solutions that are not just your mainstream smartphone things that we're typically used to. It provides other options to pay, and that covers digital inclusion, social inclusion, financial inclusion too. But also means that you can pay whenever and wherever, like you do cash today, and have choice about how you pay, and extends those features into the digital space. So it's not a one-size-fits-all model, but it does help those objectives and make sure that actually, in terms of providing a public good, that you can ensure that everyone has that ability to pay. Now, the extent of that will vary by country, by the demographics, the needs, how much cash is in use, whether it's a worthwhile thing, and also the available infrastructure, lots of different dimensions. But also, for example, there's not also one size fits all solution. Some countries, it might work to just have one type of solution but actually in reality, people may want to have different solutions, so it's a seamless experience to pay. The resilience needs also will vary. So for example, if there's short-term outages, your typical devices, your phones or POS devices or whatever, can probably handle that. Ongoing scenarios, again, where you're in areas where you've got limited connectivity, could work there. The challenge comes in if you're doing in a civil contingency scenario as well, because actually how long are you going to be out for? What type of solution might be useful in that scenario? What's the cheapest thing to roll out, and so on. So there's multiple layers to that, but ultimately the offline payments does ensure that the public good and everyone can be included. Those types of considerations can be met.
And just to clarify, by civil contingency, you mean a war situation or a disaster?
Yeah. War, natural disaster, it could be kind of a major cyber attack, things like that. But anything, where it's prolonged and unexpected, where you might need that. Now, again, cash would be that alternative. There's distribution challenges. This doesn't say that offline is the only way to do it. Cash is still a viable thing where you have it, but if you needed an alternative, then some types of offline solutions can help. Not all of them may work, and that's because there are some technical limitations to things. But I mean, those things will need to be worked out in the design of the end-to-end system, about the infrastructure that supports it, the types of solutions you might use in a given context. Yeah.
Thank you, Beju. So Lars, let me ask you the same question essentially. So how do you think offline capabilities affect the goals of inclusion and access, and also how do you think it affects the usage of a CBDC? How much users will adopt it?
Yeah, so I like how Beju referred to the ability to pay, and I think that's getting to the core of accessibility. Now, the problem that we have today is that we only have one truly inclusive means of payment available to everyone, and that's cash. And unfortunately, there is no equivalent to that in the digital space. And I think the latest figures are that some 1.4 billion adults remain unbanked globally, but there's even a portion of unbanked people in Europe, for example, that's often forgotten. For example, children or some unemployed people who may, for whom it may be too costly or not profitable to have a bank account in the first place. And one of the other reasons for that is that digital payments, as they are being used today, they currently require contracts with a third-party provider, which may charge fees or use personal data or be prohibitively expensive, any such issues. There's also, of course, the topic of creditworthiness. So children, for example, cannot get credit cards in order to pay digitally. And this is why we're saying that CBDC should be a digital form of cash, basically a digital complement, meaning that it must be available for everybody and work in any situation at any time. And having said that, we think this implies, or this kind of requires, that CBDC is offline capable. So from the very beginning at Filia, we considered how to handle secure and consecutive offline payments in areas with little or no internet connectivity. Maybe just to clarify, consecutive, we mean the ability to spend money that we have received offline. So we can, as a merchant, I can take offline payments and then immediately spend it again. And in particular for rural merchants, it's very important for any CBDC solution to be to have that kind of characteristic. And we have some learnings from that we got from the ECB pilot in Ghana, where these kinds of consecutive offline payments delivered on the promise. And we've had people in rural areas who had never done any kind of digital payments, and using the payment cards and payment devices that we provided, they were now able to do digital payments, and some of them even started to convert their cash holdings into digital money because they felt it was more secure than having physical cash lying around. So basically, to conclude, offline payments from our perspective are one piece of the puzzle towards digital payments. Without a bank account, or maybe even with a bank account if you have one, getting people to use it is surely one part caused by technology, but there's also a whole lot of other aspects to consider here. We ran one experiment with a major national bank on integrating offline payments on existing ID cards so that people could be onboarded more quickly. And I think that kind of circles back to what Beju also mentioned on the ability to use particular devices. So if we can put CBDC, for example, on devices that people might already have, maybe not smartphones, but maybe feature phones or other types of cards that they have, then it will be much better for and faster for onboarding, and then thereby ensuring better adoption and better usage.
Well, thank you, Lars. That's very clear. So let's maybe get into some of the specifics, the technicalities of offline use. And I think I'm going to ask you the question again, Lars. So how do you actually enable offline payments for CBDCs on a technical level?
Yeah, so the cool thing about cash is that it just works offline, right? You don't need to do much. You just hand over someone the piece of cash and it's done. So I think from my perspective, the CBDC needs to come very close to that kind of user experience. It needs to be very simple and a very intuitive user interface. And one of the key factors, which I've already mentioned, is to use maybe reuse existing devices, or if we cannot reuse existing devices, have low-cost devices such as smart cards or wristbands, for example. And if we look at developed economies, for example, in Europe, then it should also work offline with smartphones. So the technical idea that we cooked up there, how we enable those offline payments, is by using a token-based system where the tokens actually represent money with a particular denomination. So I can have a token that's worth 20 euro, and the token that I have on my device, it has a private key and this denomination, and I can hand it over to someone. So I could hand it over to Beju, and then it's his money. Now, obviously, that poses security risks. That's always a challenge in offline payments. So what we're saying is here that the tokens should only be circulating within authorized wallets. So we typically do not expect any central banks to allow for kind of self-custody. So it would always be happening either somewhere at the regulated entity, like a bank, or it would be stored token directly in some kind of secure hardware that is issued through the bank or intermediaries. And the benefit of that is that central banks, they retain control regarding payment limits. For example, they could take a risk-based approach and say we allow maximum 5 consecutive offline payments. Still, in this token-based approach, the central bank does not know the ownership of the tokens, because the token does not have that kind of information attached to it, where this is basically a big benefit for privacy. Now, in terms of universal accessibility, these secure elements that we're putting into the hardware, they are available in many different form factors. So one key example is the smart cards, which we also used for the pilot in Ghana. But we can also leverage existing secure elements, for example, the embedded secure element in smartphones, which then allows us to transact CBDC even through Bluetooth, for example. But there's also other types of form factors. We could put it on SIM cards or even in eSIMs in iPhones, for example. Yeah, and basically by restricting the tokens that are circulating inside this secure hardware environment, we can, to a very high degree, guarantee that fraud and counterfeiting is very unlikely to happen. And this is how we can facilitate those transactions without having to actually connect to the online ledger. Now, having said that, I need to put a footnote on that statement. We do not expect indefinite offline circulation of the nodes, and we do not hear from central banks that they're interested in that anyway, maybe even for AML purposes even. So in our solution, we do need the occasional reconciliation with the backend system, where the wallets would connect and the hardware device would connect to the online system after a few consecutive offline payments, and then the transactions are kind of validated after the fact.
But the key is that the token-based system allows you to actually receive a token and immediately spend it. So you don't need to refer back to the backend to spend the money again.
Yeah, and I mean, the transaction is completely settled offline. The later reconciliation step is purely for detecting, in the rare case that some kind of hardware might be compromised, for detecting that some compromise has happened.
Thank you, Lars. That's clear. So, Beju, let me ask you, given your survey of central banks and engagement, what lessons have you learned from existing CBDC implementations that incorporate some sort of offline feature? And the implementation could be a pilot or a proof of concept as well. And what should central banks keep in mind when they're looking at offline capabilities? What are the challenges, the problems, the issues, the risks?
Yeah, so I mean, that's a really broad question. So I think let me just kind of take that in steps. So I know you've got this in the notes, so I'm just reminding myself. So I think a few lessons. I think be clear on the outcome and why, and the reasons for one central bank doing it versus another are going to be similar, but also quite different. I would say thinking about it from the outset is absolutely key. That doesn't mean that has to be implemented on day one, but designing for and understanding the landscape and some of the technology and architecture choices, and therefore also the kind of broader kind of policy design considerations are going to be key, because you're going to have to design all of that holistically and not have it as an add-on, because there has, as you know, as Lars pointed out, there has to be some the offline transactions and being able to upload that, and then also for risk management and AML and other purposes too. But doing that as an afterthought isn't going to work, and also how interoperability work, how the user experience work, how industry is going to be ready, how all the kind of infrastructure is going to be ready. So that's really key. And then being very clear on kind of the reasons and also the broader objectives, but also the trade-off and some of the policy considerations. So being, you know, if the goal is to just for resilience, okay, then what type of resilience? Is it just in a short-term context? Is it ongoing? And that will vary by country. Or is it just in a civil contingency, you just need a backup, right? If it is for inclusion, then what are the objectives there? Is it just financial? Is it social as well? Is it digital? Is it all of the above? That, you know, that goes for kind of accessibility, and you know, privacy is another one as well. Some regions are more vocal on privacy than others, but it's still, you know, prioritized for everyone. And most central banks in our survey said it should be the same as online or greater than. So it's clearly an important thing. But all of those things like privacy, you can't design it in retrospect, and also, you know, you want to start with the highest possible level and then kind of loosen it based on what other criteria. So all of that has to be done at the outset. So I think that's the overarching message. The other one is it must work for everyone in society, and there are some central banks going, look, we have to provide a service for just that one person over there who needs it for that. So then that's what they have to do. Now that may be at a higher cost or whatever, but we're not getting into that. The fact is that it needs to work for everyone in society, and that needs to be designed from the outset. There are some huge operational considerations for central banks here. Is actually, you know, how you're going to, who does it, how you're going to operate it, the skills, you know, and Lars referred to, for example, you know, you're doing work on quantum, but, you know, quantum and cryptography, but how are you going to do the process of updating cryptography? How is the process to apply risk management limits going to work? How are you going to vet solutions? So there's a huge operational part of just doing offline that you would still have with online as a comparison, but actually it's probably more, I would say, more complex with when it comes to offline, the range of considerations. But it's good, obviously, when you have companies who you know, been doing this as bread and butter with other kind of cards and the secure elements and stuff, that actually have that experience that can bring it to bear. The other thing is also having a very early dialogue with the private sector to go, okay, you know, are you know, how ready is your solution? And actually, these are the central bank expectations of what does critical national infrastructure mean, and those types of security requirements. At the same time, is to understand the readiness of the private sector want to provide the solutions that central bank need, and that can't happen unless there's a dialogue or there's some signal to say, this is what our expectations are. Can this be delivered? This is what's required. And then the private sector come back and say, well, yeah, that's fine, but we just need to do a year or 6 months of R&D and do that. And what's the testing cycle? What's the industry rollout? And how so there's a huge amount of questions that need to be asked now, and they will change, but they need to be kept asked. So you're going through planning, design, pilots, and so on, very, very early stage. Last thing to say on that is there are some type of central banks who've said, well, actually the need for offline may diminish over time as kind of connectivity, improves. So where you didn't have telecoms or internet, Wi-Fi connectivity, you now have it available. But what they have said is even though those impacts the need, that doesn't take it away that take away from the fact that some level of service is required, especially when there's a high dependence on digital payment systems, particularly the private sector ones. What is the public alternative to ensure that everyone can pay? So they said, look, either way, some level of service needs to be provided, but then you get into kind of, okay, we just need it for resilience or some levels of inclusion reasons. So yeah, it's basically, I think, to sum it up, as early as possible, you should be thinking about this.
That's the key word. Think about it early. Yeah. So Lars, let me ask you a similar question. So in your experience, do you have any examples? Can you provide examples of how offline capabilities have been implemented, not just in CBDC systems, but maybe more broadly in retail payment systems, and also get into how that capability has promoted inclusivity and privacy?
Yeah, it's a good thing that you made the question a bit more broad, because to the best of my knowledge, there is no offline capable CBDC in production yet. So we can only draw from very limited experiences. But in general, there are offline payment solutions that are not CBDC based already in place. And to the best of my knowledge, all of them, they suffer from the inability to spend the money that you have received offline consecutively. So there's no instant settlement, and that makes it less accessible, for example, in emerging economies. If the merchant has to wait a few days for the payment to settle, how can they pay their wholesale delivery? So we see there very often a very fast turnaround in time between they make the money and they have to spend the money. So this consecutive offline payment is a really, really important point in any kind of payment system, and we don't see that yet in other forms of digital payments. So if we actually look at the very limited data that we have, for example, from our Ghana pilot, which I've mentioned already, the key aspect to actually driving inclusivity was the use of those low-cost smart cards that were handed out from Bank of Ghana to the people, and then they could make their first ever digital transactions using those things, and they were cheap, so they didn't have to buy a smartphone or anything like that. So from all the conversations that we've heard with the central banks, is that the idea of this token-based approach, together with strong hardware security, which I've mentioned with the secure elements, largely mitigates the concerns around security, privacy, and resilience. So I think these two components together make for a very strong case to address those challenges there. If I look into my crystal ball and were to ask to predict the future, I think the key differentiator between countries will be the choice of hardware. So it will be the question, will they use inexpensive cards that will be specifically manufactured for that market, which can be done very cheaply if you're doing it on a large scale. But then you might also need some kind of payment terminals in order to accept offline payments with CBDC. You could leverage existing POS terminals, but it's likely that they need some kind of software upgrade to accept those types of payments. Or will they be thinking more of putting the tokens inside the phones using secure elements, and then you would require smartphones? You can do that, for example, in an economy or in a country where there's already high smartphone penetration. So these kinds of choices, I think, will be key differentiators, and I will be very excited to read the first statistical surveys on that, which system will gain the higher adoption, because I think there's no such data yet.
Probably not yet, I should say. The CBDC systems have not been implemented to a great degree so far, but hopefully that will come. So, Beju, let me ask you a similar question. So beyond the choice of hardware, what do you think is the future developments or trends in offline payment capabilities of CBDC? What do you think are the major questions?
Yeah, I mean, this came up through the work of the handbook. So yes, there's hardware solutions out there, but there's also software-based ones or hybrid ones. And again, they offer different opportunities. And I think what I would say is that it's not one size fits all. Some countries will want to use more than one solution just for choice and also kind of interoperability and just having a more seamless user experience. I would also flip it on the other end, is to say we're driven heavily by convenience, user experience, speed, efficiency, all these things. So if you look at the kind of just an everyday retail payment scenario, I just want to go in and buy my milk, my bread, and leave the shop. So, you know, I don't care whether the system's online or offline. I just want to pay and leave. And I want to pay with whatever device I want to choose, and I want it to be easy, and I don't want to have to think about whether something is offline, and I go, oh, I need to go into my offline balance, offline card. That's just not going to work. So ultimately, the development in this space. So right now, most of the solutions that are out there, they're great and robust, and you know, they will do different things. Some of them are similar to kind of the early attempts at kind of offline payments from like the 90s, and you'll see that in the handbook. But you know, that has developed, and the technology underpinning what this is, you know, robust, solid, well-tested, and existing things that we already use. But ultimately, I do think actually, and this will vary by country or region or other developments, is a lot of this is going to be driven by convenience, speed, user experience, but also the utility and the need for offline payments in a certain context. You know, the more integrated it is with things that people use or, you know, to pay already, whether it's my smartphone or something else, the easier it's going to be. But you know, we're going to have to be driven by that. And I think also if there is more attention on this, then we're going to see more kind of research and development around offline payment solutions and what that could be. You know, a few weeks back, we had a deep dive with a number of solution vendors here in Stockholm. And so we learned a kind of a broad range of things. You know, we had hardware, we had software, we had POS people there, we had, you know, large companies who are thinking very differently about this as well. So that's really interesting. So I think actually, you know, it's ultimately going to be driven by people, the available infrastructure. The other thing to point out is that some countries, according to their available infrastructure, may be leaning towards more software-based solutions, and others may be leaning towards more hardware because of the available infrastructure. And that's also going to vary too. So I think, you know, we through the handbook, we've kind of put this on the table to say it could be this or that, or, you know, here's your options and choices, but it's not. I think one of the comments we had back saying, it'd be great if you give us a decision tree, but actually it's multi-dimensional, and that will vary by country. So you have to figure out what your objectives are and then what the best thing is. Probably quite a lot to kind of share in that space, but yeah, that's the insight.
Could you perhaps clarify for those who haven't read the report yet what the difference is between hardware and software-based offline capabilities?
So hardware-based would typically, you know, use you know, cards, or a device will have a secure element, may leverage the trusted execution environment on the device, but typically will be based on that. Whereas a software one will be an app that will could leverage those secure processing components on a smartphone or the feature phone, but also may not, and could just be a secure software product that's hardened to the right degree. Again, it'll be in the form of an app, whereas the hardware-based one would be typically something like a card or a fob or some other, you know, some other means that, again, you know, all would have some level of tamper resistance, whether it's software or hardware-based, but it's more just the form it takes.
Thank you. So let me ask a last question to both of you, and you first, Lars, before we move into the Q&A with the audience. So Lars, what key steps can central banks take to ensure that offline capabilities and CBDC systems will align with their overall objectives, which is, of course, not only inclusiveness and access, but also financial stability and monetary stability, and how that will affect individuals and businesses?
Yeah, so first of all, I agree that we may need different form factors, different devices, different means of payments to ensure diversity, and also to foster strong competition in the market, right? I mean, this is also one of the cornerstones of an economy, that you have competition, which ultimately benefits everyone. And we feel that CBDC really is the substrate for that competition and for innovation. And in terms of concrete steps, I think it is very important to include the different stakeholders from the very beginning, and that not just includes the commercial banks, but also merchants and businesses and individuals, even to have a tight feedback loop where you have put out surveys and ask for their opinion and ask for their attitudes and investigate their payment patterns and so on. So basically, you would start out with a small pilot, then you test your hypotheses and figure out those patterns, and then you make adjustments to your strategy. So again, yeah, I can only reiterate that there's no one size fits all solution here, and different markets need different approaches. And ultimately, if you can ensure that there's this diversity and there's competition in the market, then I think ultimately the goal will be that more people can pay. And I think this is good for the economy and should also help to achieve those central bank missions and objectives.
Oh, thank you, Lars. So the same question to you, Beju. What key steps should central banks take to implement these offline capabilities?
So I think it goes back to the same thing. A few things. Be clear on what the requirements and objectives are. And like I said, that will vary by central bank. And be clear on that from the outset and those expectations. But also working very closely with the private sector. That's not just the solutions, I just answer one of the questions. It's also ensuring PSBs, banks, merchants, that whole ecosystem is ready, willing, and able to support this. But also have a plan for how it might be rolled out and testing it and everything else. And I mean, this is going to apply to CBDC as a whole. So it's taking its stages, taking a very kind of in a kind of measured fashion. But I mean, to start off, and if you're going to be successful, be very clear on what you're doing and why. What types of solutions will support those objectives, how you're going to operate it and manage change, but also more importantly, this. So if you're going to have offline payments, it's not the central bank that has to support it; it's everyone else that's going to have to support it as well, and to make sure it works and it's tested, it just works, and that's going to require very early planning and dialogue. But from now, really, even if it's implemented later, it still requires that planning and dialogue now. So that's probably the most important thing. And the other thing is, solution vendors need some direction to go, okay, this is what's required. So they're hitting, the expectations, and sometimes those expectations of what, critical national infrastructure, all those kind of big questions, it needs to be made clearer. And therefore solution vendors go, okay, right, we know this. I mean, the other thing is there's no, formal decisions being made by a lot of countries go, we're actually going to roll this out. And I think also until that happens, private sector needs some signal as well to go, we need to be ready at some point, but that's not clear as to when. So, it makes investment or having these dialogues difficult. So I think actually that I would say that probably needs to happen more now. I think also for central banks, just more broadly, they get an idea of, oh, okay, this thing might not be a year, or the banks, PSPs, merchants can't do this for another 2 years, or there's not enough groups around the world to do all these implementations at the same time. There's not enough skills on the planet. So there's a lot of that work that needs to happen. Of how is this actually going to happen on the ground if there was an implementation decision? So yeah, more practical rather than tech.
Yep, no, that makes sense. Well, thanks both. I think we should maybe dig into some of the questions that you have already answered a bit in the chat, but I'd like to highlight a few of them for everyone to hear as well. So if we take the first question from Christian Sylvander, and he has a question about the tokenized solution for offline payments. So he asks, how would change management work in a situation where a payment is made for $10 and the payer has a token of $20? But the payee doesn't have the change to give back $10 to the payer. And let me ask this question to you, Lars. You've already provided an answer in the chat.
Yeah, maybe I can elaborate a bit on that. So the tokens themselves have a fixed denomination, but fixed denomination doesn't mean that we are restricted to the denominations of physical cash, right? We can only have so many different banknotes, but for tokens, it's just a number, it's just an integer. So there's nothing that prevents us from kind of creating a sub token or something like that, where we say this old token had a value of $20, and now I want to split it up into 2 times $10 tokens, which is fine because I'm not changing the monetary supply, right? I'm not creating money out of thin air, which should obviously be restricted to the central bank or whoever issues the token. In which case, when you do this kind of split, you need a digital signature to prove that you were in possession of that old $20 token at the time when you split it. Now, In a normal online scenario, you would make that known immediately to the central bank and say, well, I have this $20 token here, please withdraw it from circulation, and I have these two new $10 tokens where I just made up the private key, and I have to necessarily additional signatures to prove it. And those are now, this is now fresh money, fresh tokens. In the offline world, we cannot do that. So what we do in our solution is we keep a small record of that kind of operation that we're doing on the tokens, or rather the wallets that they do on the tokens. And we store it for later reconciliation. And that's basically what we upload at a later point to the backend system. And that does not mean that the transaction is not final when you did it offline. It just means that you need to make it known eventually that you have changed some of the tokens.
So if you split a token offline, so let's say a $20 token into two $10 tokens, doesn't that provide more of a security threat to the system that you have this capability?
It does not, because you do not change the monetary supply, and any wallet could look at that record and say, well, you've had $20, now you have 2 times $10. That checks out, right? So a wallet would obviously reject any such operation if I were to split $20 into $10 and $30, right?
Makes sense. So a follow-up question that's also been asked in the chat, and to you again, Lars. So with cash, you know, consumers can see exactly what they have in their hand. But with a digital offline instrument, which is not a smartphone necessarily, right? It could be just a card, a plastic card, or a phone without a proper display. How will users know how much money they have and how much they've spent?
Yeah, I think that's a fair question, because we hear that also a lot in the terms of general digital payments, that people tend to spend more money because they don't know how much they have left, and you know, in cash it's just very haptic. So one of the options there is to put a display on the card. So there are smart card platforms that do support that kind of an e-ink display. This has the advantage that you can always display the balance, and the balance gets updated when you make a payment. But it also has disadvantages in the sense that it makes those cards more expensive. So every kind of complication that you add to those smart cards make them more expensive. So something that we can also do is we can just display the balance in the payment terminal. So you could have a function in those payment terminals where you're not actually making a payment, but you're just touching the card, maybe to someone else's smartphone, or you go to a merchant and tap the card, and then it can tell you how much money you have left. So sometimes the low-tech solutions are the best solutions.
Yeah, and perhaps staying on that topic. So, I mean, the most low-tech solution is cash still, and given that, you know, offline payments are most of the time physical and low denomination, and we have cash, why do we even need a retail CBDC with offline capabilities? I'm asking this question to you, Beju, and you've already provided an answer.
Yeah, I mean, it depends on need and objectives and whether it's required or not. It's not to say that it's absolutely necessary. Where you have lots of cash usage, so the need might not be there, and actually you can have that balance with if there is an online CBDC complement, fine, that might be all that's required at a certain point, but that doesn't mean that anyone who's operating a CBDC system shouldn't plan to be able to bolt on or integrate offline when required, or even just have it something that you could probably switch on later, just being quite simple. But where you have situations where it's less cash, I don't like the term cashless, because there will always be some level of cash, even if it's minimal, but for now anyway, and we'll see in time. But in those situations, actually, you're dependent on private sector provided digital rails. There's not enough cash usage or acceptance around, and Sweden's a really good example of that. I mean, I don't think other than taking out cash for my daughter to use for school, since I've been here, I don't use it or touch it, and I struggle to find a cash machine most times. But it's here I would say the need might be greater, because as the Riksbank have also highlighted, you know, offline payments, excluding CBDCs, could provide that resilience there, where there is, you know, even if you had, you know, the private sector were to provide that, or we're saying actually there should be some provision for offline capabilities, it's not a bad thing to have. So I think it depends. So if it's not required, or it's not necessary at this point, that's fine. But if you don't have the cash infrastructure, or it's not being used, then actually it's probably a good thing to consider at this point. So yeah, I would say with any of these things, even CBDC as a whole, it's, you know, it's a requirement. The thing is it needed and why, and what's the objective? There's no rush or race to the front, in my view, anyway. So
it is indeed a fundamental question that many central bankers are still trying to answer themselves. So
it's the still thing. It's like Bluetooth, right? I mean, when it came out, kind of used it for those headsets. Now it's embedded everywhere, so it's not a case of build it and people use it day one. These are the things that will grow in usage over time, and sometimes there's a catalyzing event. I mean, look at the use of digital payments pre and post COVID, and so on. So sometimes there is some. I mean, open banking in the UK, one example of increased use of faster payments over time as well. So we're not going to know, but until you kind of build it, test it, and do it in a rollout way, and knowing that actually that upfront investment might go well, it might not, but there has to be some risk taken. We're not going to also know the full opportunities because we don't know how the private sector will kind of take that and then use it, or others will use it. So it's a question of providing that base infrastructure and being able to kind of then build on it and improve it. But as long as that is secure and resilient and does that one thing really well and can be reliable, then actually the rest can flow from there. But we'll get into like trade-offs and how much risk does an investment needs to be made and so on. But these are the big questions now coming up, I think.
And if I may add a point here, because I love the analogy with Bluetooth. So it's definitely true that we cannot foresee all the things that are people gonna build with it, or all the things that are people going to use it for. And it might be a bit counterintuitive from our perspective. Taking CBDC offline is one of the most innovative design features of the technology. And imagine how many people would be using Spotify or Netflix if you couldn't download movies or download songs, right? If it didn't have that offline capability, it would be a lot less useful than it is right now.
Yeah.
So it's a core ability of any future retail CBDC that it has to have some sort of offline capability. Is my impression, at least from what you're saying, right? I mean,
I think that's fair, because ultimately you want to go and buy your bread and go out the shop. You don't care whether it's online or offline. You just want to pay. So it has to be there. We can't be fully reliant on digital payment systems. I mean, sometimes you do have cash, you can find it, but in a world where that may not happen or it's used less, you want to be able to pay, and everyone needs to be able to pay.
So as you say, I mean, there are many ways that central banks can implement offline capabilities, and I think that then and they might actually implement it in different ways across the globe. And then, given my background with cross-border payments, the next question would be, well, what if you have central banks doing many different things, and you want to enable cross-border payments also in an offline environment? Have you given any thought to that, Lars, in your at DNG?
Well, that's a complex question. So cross-border payments is an active area of research, and offline payments are also an active area of research. Now combining that two together is a new and exciting area of research. So I have to admit that we have not looked at the combination of both, because the issue is that in most cases you will want to find some kind of exchange rate, and determining that exchange rate offline is going to be very hard, if at all possible. So technically speaking, nothing prevents us from putting different currency wallets on the same device. So you kind of a well, I wouldn't say universal smart card, but like a smart card that works in multiple countries with multiple currencies. But unless you have kind of a fixed exchange rate agreement, then coming up with that rate is going to be very challenging. So I feel like the ball's in the court of the regulators there, or the central banks, before it can be passed back to the technology providers.
That's a good point. Beju, do you have anything to add on this?
I mean, we had this question that came up in the survey. I mean, we said might work in a single currency area where you do that quite easily. But outside of that, depending on the device or how the user experience work and the FX rates, and also management of how money flows around, Icebreaker showed that the CBDCs don't need to leave the domestic system. They're just an accounting trick with the FX providers that are part of that. And similar in this case, it's like, what's the other implications or the other side of if you were to do it cross-border, ignoring the FX and the device limitations or anything like that? You also have the interoperability piece of how you're going to go between different devices as well. Not everyone not all countries are going to use one type of solution. And at the moment, depending on how that value form of the token or is implemented, will it work across different devices in different countries? So there's a lot of factors, but right now I think most central banks are focused on from a domestic purpose only, and that makes sense. And actually, then if you do travel and you want to like a local offline solution, then fine, there's probably some tags or some other solutions you could get temporarily. Or as Lars said, it could just be something on the wallet that you hold on your phone, multi-currency wallet that supports offline in wherever you are. But cross-border, I think there's more complexity with offline that needs to be sorted out first before you even get into the cross-border angle. So I would probably say put that off the table for now, but there's issues that I've talked about in terms of interoperability and other things. If this was a real requirement, then as Lars said, central banks need to really think about, we want you to enable this, and the private sector come and go, this is how it could be done. But I would say take it off the table right from now and think about just implementing it for domestic use only as a starting point.
It gets more complicated as you combine things.
Yeah, it's not. Yeah, it's more. It adds more complex onto something that's already really complex. I mean, just to give you a view, when we were developing the handbook, I remember we wanted to distill it into a one-pager so we could show it at the BIS Innovation Summit to say this is what it covers. But in order to do that, we developed a mind map, and you couldn't even see it. It zoomed out. It had so many different angles, and if you've gone through the handbook, you'll see why. I mean, it's a really big topic, and I would say we could still do more on it, but for kind of let's see what we can do in a few months. That's what come up, but it's a really big and complex topic. So yeah, just stick with the essentials for now, and then these other kind of things should be considered later, I think.
Thank you, Beju. So let me just ask Lars you a final question before we close the call. So I'm challenging you to answer this in a couple of minutes. On the KYC, AML, and CFT point, is it possible to monitor and track offline transactions if you want to? And perhaps conversely, is it also possible to enable complete anonymity if that's the use case you're going for?
Yeah, so our solution is built with privacy by design approach. So the only data that is being collected on the cards is the data that's required to validate the authenticity of a token. But as I mentioned earlier, there's no personal information attached to the token. So the central bank in that very anonymous setting would not learn anything about what anyone's doing, except for that some tokens are changing hands. Now, most central banks that we've spoken with, if not all central banks that we've spoken with, would not want to have any kind of traceability. So they would follow a kind of a tiered approach where you have offline wallets or offline capable wallets that are able to transact anonymously below a certain threshold. So for example, let's say in Germany, I can pay 50 euro or 100 euro completely anonymous, and the wallet would not collect any additional information. But if I'm exceeding a particular amount, or if I'm receiving a lot of money, for example, if I'm a merchant, I would need to go through a KYC process or an extended KYC process. I need to show my business registration and so on. And then there's some kind of additional collection of data. And that can also be set up in a way that it's anonymous to the payer, but not anonymous to the payee, so that the payee's identity is disclosed, but not the payer's identity is closed. So the only answer I can really say here is it depends, and our solution can be configured accordingly. Just keeping in the back of a mind that both extremes are unlikely. So it's unlikely that we have full privacy in the system or full transparency in the system. Most central banks will choose somewhere in the middle, I think.
Thanks a lot, Lars, and thank you, Beju, both of you for attending the call today. I think that's all we have time for. So let me just say to everyone attending that you can find the speakers, Beju and Lars's LinkedIn details in the chat. You can also find links to various resources, their reports and other things they're working on. And you also have my LinkedIn details if you want to contact me at FNA. And let me just say that coming up next, we have a Subtech podcast with the Bank of England and the Österreichische Nationalbank, the Central Bank of Austria. And we also have other June broadcasts with, among others, the BIS Innovation Hub again. So let me thank everyone for a very good session on offline capabilities of CBDC, and I hope to see you again. Thank you very much.
Thank you.
Thank you.